Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning. I'm back. 17th Thursday. We've got continuing jobless claims. We got Philadelphia Manufacturing Index, and Treasury Secretary Yellen is testifying today. So should have an interesting day. But first, we've got to figure out what the hell happened yesterday. Oh my gosh. Okay, so we had an FOMC. Now here's the thing. Since I've been gone, there's been some movement. Okay, there's some movement on Monday. There was some movement on Tuesday, and then the FOMC dish. So it looks like market was actually kind of heading down before the FOMC announcement, and then when the announcement came, there was some dot plot changes. So this is not the first time. Oh my gosh, you know what? Sources are wrong. Sources wrong. Hold on. Let me fix that. It's showing you my OBS. That's so stupid. Okay. Not that one. That one. Sometimes like Windows will switch up which monitor when I turn them off and on. Okay, here we go. All right. There was a move Monday. There was a move Tuesday. There was a move Wednesday. This was the FOMC. So we were already going down into the FOMC, but then the thing that moved them down supposedly was that the dot plots changed. That they moved up some of their estimates. And the Federal Reserve did acknowledge that inflation was running faster than anticipated. But they basically said, like, whatever. It's no big deal. So, and then in the press conference, Powell said, you know what, like, don't worry about the dot plot. Like, it's not that important. And I would agree with him. I mean, it's not the first time that he said this. I mean, guys, we're talking about something that will happen maybe in 2 years. Like the end of 2023, and y'all freaking out about it. I think it's a little silly. I do. But you know what? When you get a move, when you get a news event like this, like they want to go, they're ready to go, they're going to find a trade one way or another, and so it's very often that the market overreacts. I think this could be a buy. Coming over here into the treasuries now, the treasuries really reacted to it. I mean, look at that. Whoosh. We're not quite as low as, we were back in like April, May or March, April. But that was one of the largest moves that we've had in a while. Now, with a move that big, you kind of got to wonder if we're not going to get sucked back up, right? So it very much depends, though, on what happens here with these initial jobless claims and the Philadelphia Manufacturing Index, right? Moving over to oil just kind of chugging along. Now, gold and silver were interesting. I mean, man, they just got creamed, right? Gold lost like what, two weeks worth of gains there. That really sucks. That really sucks. Silver below this line that I had drawn. Let's see if they bounce back today. Now, copper also kind of having a struggling a little bit. China really clamping down on that. I sit there and look at that and I'm like, was the move up in copper before really all just Chinese speculators moving it? I don't know. And then you get the dollar index, and the dollar index moved up pretty significant. I mean, they've had a real problem getting below this 90 level. All right. But now all the way up to 91.65. Pretty crazy. But again, I think you kind of have to take a step back and say, you know what? Probably they're going to overshoot. And like reflexivity like really matters here, right? Because you get a move down like that. It confirms the hypothesis. The hypothesis is that the Federal Reserve is going to increase rates sooner than anticipated, and that's a negative for the S&P 500. Why do I have an order out there, by the way? Well, the market has, when the market moves like that, then everybody goes along with it. They say, okay, that must be true. So it could be wrong. It could be that and what I'm saying is that the outlook hasn't really changed. I don't think that the outlook has really changed. And so some of those moves from yesterday, they could be completely washed out. But like, what does it take to bust that bubble? Well, we got non-farm payrolls. We've got Philadelphia Manufacturing Index. All things that could flip this around. So we got the news coming out here in a few seconds. Oh, let me make sure I've got my thing out. We're looking for continuing jobless claims month over month to be 359,000. Okay, so it was higher than anticipated. 400. Okay, so that was a pretty bad number. I'm not really seeing the markets react too strongly to it yet. I kind of think, yeah, that right there. Oops. Winston says, welcome back. You were missing. Did you have a good time? Yeah, it wasn't too bad. So my trip was basically the middle of nowhere in Colorado somewhere. pretty far up in the mountains at a cabin. And didn't do anything all that interesting, but it was fun. Okay. Good trade. I was about to extend that, but I put it out. It was too fast. Ouch. Is the S&P 500 going up? Oh my gosh. This is so dumb. This stuff is so dumb. I just think this is so dumb. Yeah, so I want to look back at where I took that 20. Oh, okay. Well, so I should be. Oh, yeah. Well, you know what? So now that we've moved, let's turn on the robots. Let's turn on Gabby and Jay. I'm thinking it makes a false move up just because it's normal procedure after FOMC down up down up. Well, remember that the one they pull. When the order book pulls like they do for FOMC, even though some of that latent liquidity, even though some of the resting liquidity comes back, the latent liquidity doesn't. And so you can just get these bender moves that are completely contradictory, right? Like, you'll look at the way that the markets move during some of these large news events and then tell me that the market is efficient. It's not. So I think that what we want to do as traders, we know that the efficient market hypothesis is false. So what we want to do is we want to come in and we want to list out those inefficiencies. What are some inefficiencies in the market and how can we best take advantage of them, right? One of them is that the limit order book is an inefficiency in the market. One of them is that reflexivity is an inefficiency in the market. We should make a list. Volatility clusters, that's an inefficiency in the market. Everyone started reading news post fact where they over-leveraged and were in red. So are you saying you think that the market was already kind of like, they were already kind of losing money because the S&P 500 was down? Maybe. Oh boy. I see somebody posting that we're going to get the Bitcoin death cross this weekend. Market was too long, so stopped most weekends for sure. Well, you come back to the earlier in the week, right? So one thing that I do remember reading is that there is a lot of gamma that expires this weekend. And probably it's sitting there. I'm going to bet that the gamma is sitting at 4,200. But they were saying that there was like a ramp into the close, and then they had to give it all up the next day. So I think that you're probably right. There's probably was a lot of options players that were unhappy with that. And the S&P 500 moving up on that was just so funny to me. Oh, that was Canadian. I was just hearing an adjustment, but it was a Canadian number. Anyways, now I did get a bunch of time to study while I was on my trip. I wouldn't say that it was insane, but I got a couple of hours in, and I learned a lot about treasuries. Things that I don't think that I will ever actually use, but it was interesting. So I learned about another inefficiency in the market. Just as that options volatility tends to over predict what is the amount of volatility that there's going to be, the same thing happens with forward interest rates. Forward interest rates tend to overstate how much things will actually move. I thought that was interesting because the book was basically going down through like, okay, we want to model the yield curve. How do we do that? Well, the first thing that we've got to do is we've got to be able to look at what you get, because maybe you get just a regular treasury. Maybe it's a zero coupon bond. That's one where like there's no coupons, but they just pay you all of the interest at the very end of the bond, right? Maybe it's there's all of these different kind of ways of looking at it. Maybe they give you a forward interest rate, right? And how do you calculate all of the other forms of the bond from that one? So that was mostly what I was looking at. Then they get into, okay, so you have this, if you have like a 12-year bond, what should it be priced at based on what the yield curve is right now? And then there's all these different ways of interpolating between the different points to get your number and make your estimate about what it should be worth. So that's what I was reading. It was interesting to me because I did not realize that was such a big field. Like I thought that they just kind of priced these things, but no, like they have to they do all of this math to try and figure it out. So that was really interesting. There's so many different bonds in them. Like I don't think that we realize how big the bond market is. Like we think, oh yeah, like the bond market is huge. Like there's so much money in it. Everybody buying these treasuries, but it's so much more than that. There are so many different types of bonds. Like when you think about like say every company out there has a bond of some sort. I mean, probably not every company, but most companies do offer bonds. And then you've got all of the municipalities out there. And then you've got different issues, right? Different issues of, debt. So a company could come out and issue debt multiple times. Well, the field of bonds out there is so much higher than the number of stocks. and this huge world, they use math to try and figure out what those bonds should be worth based on what the treasury is and the specific details of that bond, and then the details of the company and so forth, right? They're moving up. I think they want higher. I think that it may be stuck here a little bit, but I was looking at Gabby. Gabby was making a little bit of money, but then I realized, oh yeah, she's trading in E-mini. Like even a tick up or down matters. So anyways, but that was the thing though, was it was like, okay, but if we're trading spreads, does all of this really help us? I'm not sure, but it may, I'm not done with the book. So maybe the deeper I get into it, the more it may matter, right? Treasury came back there a little bit. Banks went up yesterday on news. Well, yeah, so this continues to be this interesting dynamic, right? Like gold. I continue to think that gold is the most interesting place. And I think that gold really highlights how careful you have to be. I guess we should say how careful you have to be about listening to the I don't want to call them fear mongers, but the perma bears. Let's call them the perma bears. The guys like Zero Hedge. Like Zero Hedge offers a lot of really good market analysis. Like this is the thing, they post so much good stuff, but they clearly have a bent. Have you noticed how ever since the CPI number, there has been like 10 stories a day, not 10, but a lot of stories a day about all of the people out there that don't believe that the inflation is transitory. And they just keep pushing that over and over and over again. Well, then you come into yesterday, right? What's going to happen? You come in, you say you think that the inflation is transitory. You go long gold, you go long these commodities and all of that sort of thing. And then what happens? You get your butt handed to you. The Peter shifts, the Peter shifts got burned yesterday, right? Gold got decimated. I mean, in the larger scheme of things, I kind of look at the gold move and I think that it'll come back, but man, it was not look good, right? This is for you to look at later. Might help your children with math. I lost math around fourth grades too. Oh, really? That's weird. Anyways. So yeah, like inflation is higher than expected. What does that mean? The Federal Reserve is going to raise interest rates sooner than expected. Oh, it's almost like there's a mechanism out there to counteract inflation that we understand really well. So like trying to trade off of the inflation, like trying to set your entire investment thesis around inflation, at least right now, not working out so well, is it? Not working out so well. Of course, I think that everybody lost yesterday, right? Unless you were like short bonds or something. Anyways, I think it's just so funny. What to expect today? Well, so we had our continuing jobless claims. It was higher than expected. So we were expecting 360. We got 412. That's not good. We did see the treasuries move up a little bit. Not a ton. Like we ran into the limits of that very quickly. E-mini started to move up on it. We still have the Philadelphia Fed Manufacturing Index. Oh, no, wait. We did get that. That was 30.7 versus 31. We still have Treasury Secretary Yellen speaking today. So it's kind of funny to see the S&P 500 moving up off of jobless claims being bad, but they're doing so because of the interest rate. So my running thesis right now is that we will probably have some retracement of yesterday's move. Now, Financial Juice wants us to refresh the website. Gotcha. An exit from the central bank's extraordinary easy monetary policy so far is smoother and signaled to be speedier than when the reins were tightened after the last crisis. HF says so news doesn't give an edge. It can. I'm not sure what thing I was saying that you were responding to there. The thing about news. So here's how I would put it with news. There are inefficiencies in the market, and those inefficiencies tend to get exposed the most during news, right? So when you say something like, so news doesn't give an edge, I think that you're making this kind of assumption like, you read the news is good or bad, and then you take your trade based off of that. And then if you do that off of every news event, then whether or not you make money or not determines whether or not you've had an edge or not, right? Well, if your analysis of your news is that simple, then you can have problems. Sure, look, the news were all negative, but the market moves up. Yeah, well, so in this case, so let me try and list it out here for you. Where's my pen? Come on. Sure, we'll do it in yellow. Text. Okay. So your first question has to be effect on the security you are trading. Okay. Or do you think that the negative new would price later in? Oh, great. No, it's only going to be text here. If you're taking trades for small targets with tight stops, then that's not true either. Okay, so here's the first thing you have to do is you say the effect on the security you're trading, right? That's always got to be your first question is, okay, is the fact that unemployment is good or bad? Or, sorry. They just started talking on the squawk, and I lost my train of thought. The question is unemployment claims being higher than anticipated good or bad for stocks? Right? Well, for the direct impact on the security that we are trading, I think you have to say that it's bad for stocks, right? Unemployment is higher. That means that people are going to buy less stuff. That's generally bad for stocks, right? Is what I think you're trying to say. Okay, but then we have to say effect on related instruments or market as a whole. Okay, you got to look at the gestalt. So this is why, especially if you're trading futures, okay, because what we're doing is very, very much macro based, right? So we can't just look at the impact on the S&P 500. We have to look at the impact on all of the securities. We have to go in and we have to say, okay, is that good or bad for the 10-year treasury? Well, that's going to tend to cause the 10-year treasury to move up, because that means that they aren't going to raise interest rates as early as they would want to, right? Unemployment claims, unemployment being bad, those are one of the two goals for the Federal Reserve: price stability and maximum unemployment. If we're not getting good employment numbers, then that means that they can keep interest rates lower. Okay. So when we look at the overall complex, we actually realize that because of the effect that this has on interest rates, it's actually kind of good for equities. Okay. That's the next thing. Okay. Then you have to look at current positioning. Okay. So what is the current positioning, right? Well, the market is down big time from yesterday, and there is probably a really huge gap / vacuum up above us, right? Current positioning, and then we'll just put order flow. Okay. So order flow wise, we didn't see a lot of like direct trading off of that, did we? Like when that news hit, there wasn't like this burst of volume, everybody going, oh, because of this news, I want to take a trade. Okay. But we can still kind of interpret what was the news, what was the impact on the market, and what was the positioning. So when you combine those two things together, what do we get? Treasuries are going to move up. The news is bad for equities, but it's good for the treasuries. So those can kind of cancel out, or maybe even cause equities to rise. But then you combine that with the fact that they were already kind of short and that we have some gaps above us. Then what does that mean? That means that we could have some good moves up. Right? Well, then there's another thing that you have to consider, and that is reflexivity after the order flow, right? Because you could look at the way that they moved and you could say that's incorrect. And then you have to look at the reflexivity, which is like, was the move correct? How long could this move last? What would it take to prove them wrong? Right? So here on this move, we have a move up on treasuries. I think that the move up is the correct move for the treasuries, at least. But let's just say that we disagreed with it. Then we'd have to look at it and we'd have to say, well, why is it that they think that that was good? Why is that right or wrong? And then based on why that is right or wrong, then we can kind of try and sort out what it's going to take to disrupt that trade, to disrupt the markets on that one, right? So, for instance, today I think that we got a good potential, Because we got Janet Yellen speaking later in the day, right? So Janet Yellen, she could come in and she could say, oh, yeah, even though the unemployment numbers weren't very good today, there's this, and this reason why that number would be bad. And it's really not a big deal. And overall, things are looking really, really good. And I'm more concerned about inflation. Like she could come in and she could say something like that. And then what would happen? All of a sudden, everybody that had been long would just go, oh, I was wrong. I need to get out of this trade. And they would sell, right? The market isn't built for speculation, is it? It's not. That's not the purpose of markets. No, that's not. But again, the whole thing comes back to the efficient market hypothesis. This is why you hear people talk about it all of the time. I don't think that retail traders realize the significance of the discussion around the efficient market hype. I don't think that I ever realized it, especially in my early years. I think the reason why I didn't realize it is because retail traders contradict themselves on the efficient market hypothesis. They come in and they say, the efficient market hypothesis is true, ergo, all I have to do is look at the chart and it will tell me everything that I need to know. But then somehow there will still be inefficiency left and I can catch a trend or something. Like it's so totally contradictory, right? It's efficient, but then I can still make, like, if the efficient market hypothesis is true, then trading off of market generated data will always lead to a loss, essentially. Like, well, not always lead to a loss, but over the average, you will lose money. Okay. Like, retail traders on the whole should lose money. And hey, you know what? Retail traders on the whole do lose money. Okay. But it's just contradictory, right? So let's take a step back. Is the efficient market hypothesis really actually true? So I was watching a TikTok video just before I came in here. I commented on his videos like, I'm going to cite you next time that people are talking about the efficient market hypothesis. So he was saying, okay, lumber has been going up. Okay. And now over the past 2 weeks or so, it's come back a ton. And why is that? What's going on? Well, the reason that it was going up was because there was not a whole lot of supply coming from the lumber mills. Things had been so bad before that a lot of lumber mills shut down. Okay. So the overall supply in the market was diminished from what it was in previous levels or previous periods. And then after the pandemic, we got this huge surge of demand in home building and home improvement projects because of all of the stimulus money and the extremely low interest rates. And that increased the demand for lumber. Okay. But then about 2 months ago, we started to see that things had gotten so expensive that people were putting projects on hold. We had known that. And the thing is we've known about that for like 2 months. And it's only been like the last 2 weeks or so that lumber has started to come back. And why is that? Well, I would say reflexivity is one reason. Everybody knows that lumber is going up. There's a momentum on it. So even though the fundamental supply and demand dynamics that are created that original move had already changed, reflexivity kept it going until something had really come in and stopped it. And what was the thing that really came in and stopped it? Well, one of the points at which I noticed things really started to come back was when the Chinese came in and said, we're going to put a clamp down on speculation and market manipulation. Right. And that was one of the things that kind of stopped the markets in its track, especially in copper, but I think it kind of happened in lumber as well. And then all of a sudden, those real market supply and demand numbers were then able to like properly reflect. Okay. So what was the point of all of that? The efficient market hypothesis is false. It has the efficient market hypothesis has been falsified. That is, we have found instances where the market is inefficient that disprove that theory. Not only just like there's a specific instance where the market is inefficient, but rather, or that it happened for a short period of time. No, we have found things about the structure of market from market microstructure study. Remember, the market microstructure is a study of how markets are set up and how that affects the way that things trade. And what we have learned from market microstructure is that there are inherent inefficiencies in the market because of how the markets are structured. Okay. So the efficient market hypothesis has been falsified. So then the question is, what are those inefficiencies? Right? Limit order book, market reflexivity, momentum. Past results don't guarantee that support holds for that lumber. Yeah, because most retail traders are greedy for a huge RR ratio. So yeah, if the the efficient market hypothesis is false, then what are the inefficiencies? And that is what we are seeking to trade. Then is we find an inefficiency and we try and arbitrage that inefficiency away. That's what our job is, right? Is to identify when the market is being inefficient and make money off of that inefficiency. Okay. So given what we know about the efficient market hypothesis, okay, news is not necessarily a market inefficiency, but news is an event around which market inefficiencies tend to manifest themselves, right? So if we understand what those inefficiencies are, then we can formulate trading strategies to take advantage of them, right? So one that I will encourage you to trade, and the reason why I'm willing to share this particular inefficiency and the specifics around it is because I know that there's no way that we could trade the optimal number of contracts to make it happen, because it's the way that this inefficiency arises that it's kind of like impossible that it will ever happen unless the retail traders like change their mentality completely, right? And that is that when we have a piece of news that requires a significant repricing in the markets, the limit order book limits how far that move can go. And so it is impossible for our modern markets to correctly price in the new value quickly. The limit order book won't allow it. And it takes more than long enough for you, a retail trader, to come in and make a trade and take the momentum. So what do you have to do for that kind of analysis to work? You have to look at the news. You have to say, okay, this is a really significant change from what people were expecting. And it should require a significant repricing in the market. And then once you've determined that it's reached that threshold where the amount that it needs to reprice is further than what would be the limit of the order book, then you can just take that trade. You can just close your eyes, pick a price, go long, and wait. Right? Feel market makers play dirty when news can be easily digested. So when you get a piece of news like what we had earlier, then it's a little bit different, right? So on that news, we can go in and we can say, yeah, we know how it should move the market. Like, for instance, we know how it should move the treasury, right? But we're still going to be looking at the order book and the informed trading and everything else like that, and be trying to take advantage of market inefficiencies in that direction. And so you're going to have to be able to read the order flow to be able to see, okay, like the news was good, I want to buy here, but like how far can it actually go? And you kind of have to watch the flow, right? And some of the things that I look at for there, I can't necessarily share. But, right. But I'm just saying it's a different play, right? And just because it doesn't completely take off every time, that doesn't mean that it doesn't work. It just means that for that particular trade, you have to have a really nuanced analysis, right? Like, look at just for all of that, so all of this stuff that I've shared with you here. I mean, that's a bunch of different stuff that you have to think about. I don't know how you program that. I don't think you really can. Right? It's complicated. So can you find an edge out of news? Yes, but it's hard. You have to really understand the news. You have to really understand order flow. You have to really understand the like larger market psychology, right? The good thing about science is it's true whether or not you believe it. Well, I'm hearing over the news here now that a major somebody so-and-so is looking to try and launch an index for cryptocurrencies, but I don't think that that's a significant thing for cryptocurrencies, and I don't see the cryptocurrencies moving here, so probably something we can just ignore. Gamble on news, that's not true. Yes, it is, RJ. You guys gotta put a little bit more context about what you're saying, because when I see it, it might be like I might be on something completely different. By the way, Caddy Pan, I should know, welcome to the stream. I haven't seen that name before. But you asked, you make trade mostly based on speculation? Well, I think if you just listen to that whole thing, you see that it's a little bit more than speculation. But I would say that trading news is probably where I have the majority of my good calls. Right? When we get into more like the way that it's trading right now, I mean, both of my robots took it and made money. So, and I mean, I'm not going to complain, but I normally wouldn't take a trade during that time. It's just arrogant of Neil to not acknowledge science is subject to change. Plus, yeah. Well, but the thing is, RJ, is that like if I go and I use Newton's equations, I'm going to make accurate predictions of what will happen in a system given certain rules, right? Like I know that if you drop something, I can predict how long it's going to take to fall to the ground because of the science, right? Like there are within certain boundaries things that we know are going to happen, right? And by the way, there are kind of some situations like that in equities. Of course, it's not as precise, but we can use some of the science around market microstructure to make accurate predictions on how far a security will move based on the size of the meta order that's going to be put into it. Like they've gone through and they've done this analysis, and they've found that the impact of large meta orders has a square root impact. And so even though it's an estimate and it's going to be off a little bit because you can't entirely accurately predict what the order flow is going to look like and everything, you can come in and you can say, this is how much noise there typically is in the stock, and I'm going to come and buy this many shares, and this is how much it's going to move it. And then use that to price tell your client how much they have to pay. And then you make money on the difference between that and what you actually get when you trade it. And then the fee that you put on top of it, right? Bum, 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 bum. I don't want to play the role of ace. That's his lane to decry fact. But you're right. Like, the science is subject to change. It's just I'm just trying to point out. I think that in the context of what Neil was saying, I think that when Neil says that, he's saying, well, yeah, but if I use Newton's equations to predict how long it's going to take for an object to fall to the ground, I'm going to make an accurate prediction every time. When is rollover? It already happened. So if you're not trading September, if you're trading the S&P 500 or treasuries and you're not on September, you should be moving over. If it's for other instruments, it kind of depends on the instrument. A lot of those, they don't flip over until like the last business day of the month or whatever. GC -4.3. Yeah, silver and gold are still moving down, which is a little surprising given that we saw the 10-year treasury, the yields come down a little bit, and that should typically buoy gold and silver. But you're probably seeing people take losses. I mean, what happened yesterday was like a really brutal leg pull for people in the metals, right? But also, despite the 6:30 news, the dollar is still looking pretty strong right now. So NASDAQ, yeah, then you should be on September. In fact, if you're looking at not September on the order book, it should not look right to you. Like, you should be like, where's all the liquidity? I don't know. Here I'm looking at September and I'm kind of like, where's all the liquidity? Because there's like some levels only 75 lots, right? It's a lot less than it was a month ago, isn't it? Yep, it's a lot less. I must admit, I don't always track very well when the rollover is. It's always something that's like, oh yeah, it is that time of month, isn't it? But what you gonna do? Oh, what's this Jake Sherman is saying? In Punchbowl News this AM, we laid out 5 reasons why Joe Biden should take the infrastructure deal and why he shouldn't, based on reporting from the Capitol and White House. Biden should take it because he has a lot of stuff to get done, and the most efficient and best way to get most of this stuff done is to get some of this stuff all of the time so you have less to do. Makes sense that there's a deal on the table, or at least the outlines of a deal. Scratching an itch is fun. Biden wants a bipartisan win worse than we want cicadas to bury themselves for the next 17 years. And guess what, Mr. President? This is your chance, not many more after this. Yeah. If with this next group of senators, like bipartisan group of senators doing 20, there's 20 of them and they want a bipartisan deal. And if that one doesn't work out, then I just don't think you can get an infrastructure deal. I need to make a new stock market Steve video, but I don't know. Haven't been feeling safe. I would look back at it and I was like, well, he doesn't do terrible. He just has never gone viral yet. What do I got to do to get Steve to go viral? I don't know. It'll happen eventually. I got to keep with it. But I kind of stopped making videos just for the sake of making videos. Like, I had to have good ideas. Dystopian short features Katy Perry and Orlando Bloom calling for voting rights. Okay. By the way, the treasuries did end up moving higher there, right? Oh boy, some Twitter account called the Coin Idol tweeted that Garlic Coin is the most undervalued altcoin. Yeah. Oh, and now Techcratic too. Oh man, all of the news on the Garlic Coin. Let's see. Coin market cap. I tell you what, when you look at here, I'll show you guys. Pull it over here. They're still at 12. So like there's been all this craziness in cryptocurrency world, right? 3 months. There's been all this craziness in cryptocurrency world. Of course, Garlic Coin was up at 32 at one point, but I think that was just a large meta order and whatever, right? Somebody sold up in here. But then since then, it's just been flat. Like there's been all this other stuff going on in Bitcoin, and Garlic Coin just holds 12 cents. And mind you, that before that, it was like worth 1 cent. And before that, it was worth like 1/10 of a cent. So, yeah, I'm long Garlic Coin. It feels good to see people on Twitter talking about it. I'm detecting a little bit of spread here, but it's not enough to make me want to do anything. It kind of looks like the spread is flattening though. It's like a bull flattener. Wait, Gabby's taking another one? Wait, why would Gabby... that's not right. Hold up. Well, I'm just gonna let it do its thing, but it seems like it's taking more trades than it should be. I'm wondering if it's because I have like a little threshold in there. Oh, yeah, it's 50. Yep, it's 50. I see. Well, that's what I backtested it at, so I guess I should stick with it, but Amp Global with 6 ways to make your trading day healthier, eh? I think that's one of the next videos that I will make. Will have to do with that. And there's a post, but then there's like no content on it. Oops. Oh man, yeah. Did you guys seen this video floating around where this guy is at a Walgreens and he's just stealing, packing a bunch of stuff in his arms, and he's on a bike, and the security guard is like right there, and they don't do they don't stop him or anything, and then the guy steals and leaves. And they're like, well, this is what's going to happen if you decriminalize theft. I'm surprised that there is much conversation about it on Twitter as there is. Mike says, yes, I saw that. Yeah. You would think that this would be like a no-brainer. Like, if you decriminalize something, you're going to get more of it. No duh. But, like, some people are like, oh, it's fine. So there's, like, this big debate about it on Twitter. And I'm like, how is this even, like, this isn't an interesting conversation. It's an interesting conversation to talk about how it's not an interesting conversation, or why it shouldn't be. But man, like, what are these people thinking? And then, yes, all those Walgreens are going to shut down. They've already said that they're going to shut them down. It's just, the whole thing is crazy. Yep, there you go. When you were able to find that link really fast, it must be a bigger story than I realized when, browsing. Because up at the cabin, I had like 2 bars of 4G, so like I could browse the internet on my phone and I could kind of text message, but that was about it. I didn't watch videos or anything like that. So maybe not 100% in line with the news flow as I normally would be. So we're saying this is a bigger story than I realized, apparently, huh? This is like super viral. This theft has been decriminalized in SF. I think it's been decriminalized in multiple California principalities. And basically the way that they've done it is like, if it's less than $500, then yeah, it's not prosecuted, essentially. So yeah, you go into the store, you grab less than $500 worth of stuff, and then you're fine. They won't arrest you. Juneteenth, is that also a thing? What's this? Kimberly Ross. Juneteenth is worth celebrating, and I have no idea why some of you are not even just neutral, but vocally against it. Shake my head. Well, here's my opinion. Juneteenth is a stupid name for a holiday. I'm sorry if that's offensive, but call it Emancipation Day. Juneteenth just sounds like the weirdest thing. I don't want to be the store, right? Well, those stores account for a certain amount of loss, but when people can just brazenly come in and it goes viral and stuff, like, yeah, it's going to be more common. It's just going to get more common, right? If Biden signs Juneteenth, then Saturday is a holiday. He may get that signed. So what cake? Wait, Juneteenth is Saturday? Oh. Wait, it's not they didn't sign it as a holiday that you get off though, right? So it almost kind of like doesn't matter, but just come up with a better name for it, okay? That's all I'm asking. Call it Emancipation Day. Juneteenth, like, nobody's like, Juneteenth, what's that? Juneteenth? Okay. I don't get it. Somebody's going to come in and explain why not wanting to call it Juneteenth is racist. And okay. I mean, I want to hear it. I'm sure that there's a reason. I mean, even if I think it's dumb, I want to hear it. Okay, it will be Saturday if they sign. Well, it passed both houses, didn't it? I that doesn't sound to me like something that Joe Biden would veto. Could be wrong. Could be wrong, but I don't think that he's going to veto that one. Oh, by the way, look at the 30-year coming up there. How come I'm not seeing? Hold up. I don't know about that one. I think that probably the 30 is going to come back. But there's an iceberg keeping them from going bid at 24. Probably they're going to want to go bid 24 and bid 24.5. But they may just not be able to do so, and the 30-year may come back down a tick. Pretty good trend day up in UB as well. Yeah. Well, you know what? It's been a decent move. When you see it that way, Mike, it makes me feel like, I haven't been in a long this whole time. I'm screwing it up. But, like there was that initial little move, and then since then it's kind of been, so-so. Hey, Gabby made money on that other one too. Wait, why did she get out? That wasn't the target. Wait. Oh. I had it wrong. She's taken it 3 times. Okay. Well, 3 for 3. Can't complain about that, right? Democrats mulling a $6 trillion reconciliation plan. But didn't they say, maybe they went all the way back? I thought that they decided they can't do the reconciliation. But then maybe what they decided is that they had to completely redo the whole budget. But that means that it's probably not going to happen. So they may just be going through the motions. That one. Uh, 24 goes offer again. Oh. TT scores. Train Technologies scores proofing models utilize market volume and price level data to compare against a trader's maximum disclosed volume to reduce false positives when the trader's disclosed volume is inconsequential. Does that mean that when it shows you this, it tells you, probably X amount of that is nonsense? That would be cool if it did. So if I had taken these both on e-minis, if I had both our algorithms running on e-minis instead of micros, probably should move J over to minis. I'd be at like 210 for one day. That's not terrible, right? Oh boy. So all of a sudden I'm seeing all sorts of politics stuff on Twitter. Guess they just all woke up now. And then 23 half goes offer. How long do you think that this imbalance here will last? Eventually, they're probably going to come back in line. So yeah, this one is kind of spreading, and then this one is the other way around. Somebody really wants to sell the 10. But then I come and I look at my spread charts, and they don't really show a significant change, so I don't know what to make of it. Did you guys cook in the camp? Oh, yeah, we cooked it. Listen, it was like an hour's drive on a dirt road, okay? It was out there. And then 23 goes over. Well, that time it dragged the 30-year down with it. There you go. Okay, yes, I guess the 10-year won. I was kind of right, but I was kind of wrong too, right? Because I said, well, like probably the 30 years going to have to come back. But what happened? The 10-year ticked down 2 more ticks and drug them with it. Oh, look at this action going on ahead of the open. Some really aggressive orders coming through there. Kind of holding until the open. Okay, well, with the volume that we see on the open is going to be really interesting today, huh? Yeah, there was 1,000 there. Okay, well, not a huge spike of volume on the open. We're going to have to give them a little bit. Does look bullish so far. Yeah. Yeah, so we're seeing some pretty bullish order flow coming in, but there is a pretty significant amount of absorption against it. Brendan Buck, I appreciate the optimism for a bipartisan deal, but I must say this is an awfully vague, sketchy collection of offsets. Yeah. Well, they almost touched my target and they already come back. Ain't that the way it always is? Or sometimes it be like that. You're so right. You were wrong. You were so wrong that you were right. And try reading that 3 times. Fast. No, thank you. That was already confusing reading it. Oh, there you go. Greg Greenwald. The problem for, I don't know who this guy he's talking about is, but the problem for Nathan and those like him is they built their whole self-image based on being radical leftists, totally different from their MSNBC watching parents and the Democratic Party. And now they struggle to find any differences. So this is all they have and nobody cares. That's funny. Yay. Okay. I got my target. You think that this is going to be another one of those 10-point moves, like up to 22? Well, let's say that they completely retrace yesterday's move down and touch 42.30. Patrick Rooney has a Discord. I'll join his Discord. Let's see if there's a couple of people on the Twitters that I like and that I don't like. There's this guy on the Facebook groups that everything he says is total bullshit. Oh, I can't stand him. But Patrick Rooney from Trading Technology, he's a good guy. Oh, and he has it all set up correctly. He does. Not much activity yet, though. Did you just make that? No, it's been around for a while. I guess he hasn't promoted it. So I'll join them. I'll join you. Probably will never say anything. I've joined so many Discords that were like, I'll keep an eye, but then I never participate. I don't participate enough on my own Discord. There's a lot of good activity in there, though. Actually, we should check up on them. What are they doing in the E-mini? They're talking about coding strategies. Mr. Rooney's blog is quite good. Yeah, I haven't really checked his blog. I will say I feel like he's a little bit too active sometimes, but you know what? That's what he's got to do, I guess. Probably I should be more active, huh? I think it's so funny. Like, just look at the difference between guys. Like, I think Future Trader 71, he's another one that's pretty good and legit. I really, really like Gary Norton, of course, but he doesn't post very often, you know. And Anthony Crudelli is probably the other influencer in the space that I think is I don't want to say like the real deal, because that kind of implies something about performance that I don't know, but influencers that I would trust, right? And then you go and you look at some of these people that you see on Reddit and TikTok and Facebook, compared to the two of them, like what they say and stuff is just like night and day. Because these guys on Reddit and Facebook, they're making all sorts of claims and say all sorts of things about certain signals and stuff that are just like objectively like not true. Like you can empirically prove that they're not true. Pax, I'm not familiar with that name. They do look like they still got a bullish tilt over here in the E-mini. Treasury's kind of backed off going further up, which is interesting. Oh, what? David Guetta World Tour canceled after losing USB containing his entire set? That was News Squawk's favorite David, but apparently the reason he's talking about that is because Warner Music is to buy David Guetta's catalog for over $100 million. Whoa. Oh man, that makes me think of our friend Harris Heller there. Not that he knows who I am, but there's this guy that lives here in Utah that he makes a lot of money from people streaming his stuff on Spotify, because you can play his music on your stream and you won't get DMCA'd and everything. And he's been making some good money from it. And I'm just seeing that and I'm like, oh, what if somebody else paid him several millions of dollars to just buy his library? I don't think he would take it though. I don't think he would take it, but it kind of makes you realize how much some of these things can be worth, right? $42.20. So to completely retrace yesterday's move, we would need to get back up to 30. It looks like it could happen though. They're not backing off, and look at the big old fatty order at 42.22. Well, in that one, given my situation, I might wait for them to dash through it, maybe. So they do look just a little tired. There's 1,000 there. Oh, he's probably doing it because of that. You know what I should do is, well, we didn't really use it because for reasons, but the live stream on Discord, we should probably make use of that more. Oh, we should make use of it outside of our regular streaming is what we should do. Okay, there you go. That's what I thought. Did he pull it? He pulled it. How much was it? Oh, he pulled the whole thing. 2902. They didn't really react too hard to it, though. Look at the dollar coming down hard as all of this happens. You say watch 24 on ES? Sunday weekly prep session or chat. Yeah, that's exactly what I think it should be. This is like a Sunday session. The issue is that I don't have enough time, man. I am definitely coming into the spot where it's like to really do everything that I want to do, I would have to do this full time, you know? Like, I wish I could just put out a video every day. Well, kind of makes you wonder if I put out a video every day, what the channel would do. John posted a chart, but I don't know what that's supposed to mean. Oh, I see. I can see where his cursor is. Nah, that one doesn't convince me. Here, let me show you what I'm talking about. So what I believe John is trying to point out here is that he got a cross of the 50 on his RSI, and he went in, but that like coincided with the market open. I don't know. I mean, I took it after it opened. And there was, oh, wait, what the what? What the what? Are we going to get a... No? Must be reading it wrong. Not showing any kind of growth. Well, but it did. Oh, maybe you're... Oh, it's already well above it. Okay, never mind. Never mind. But returning the FOMC release, I think you might be right. I kind of had it... I was kind of putting it a little bit higher. Like, after Powell talked and everything, it got up as high as 42.28. So I was just kind of spitballing at 42.30. But pretty aggressive down move there, huh? Look at the fall off in volume. That is enough. It's so hard. Like, we have seen so often these really aggressive down moves like this that ended up being nothing, right? But that kind of movement makes me think informed trading, you know? So I don't know. Well, we do have Janet Yellen speaking at the top of the hour, so that's something that we should consider, huh? And Jordan Peterson complaining about censorship on YouTube because they're talking about medical mismanagement of COVID. Like I wonder on your charts, John, did that cross? Did that make it cross? I would assume that he wouldn't take it because it was the first one, but that's really interesting. You know, I ended up taking one trade on my serious account in MES, but I think that's might be it for me for a while. Because like my overall structure and everything was kind of looking for a long. And normally I would be thinking, oh yeah, maybe a little bit of a pullback and go long again. But because of the way that it happened, I don't think that I can take it now. Like I would need to know what they know, you know, because it's a little dangerous to be saying, well, that looks like informed trading, but I think that they're just full of nonsense and I'm going to fade it. You know what I mean? You had to be long before zeros. Do you think that 24? You think that it was a 24, huh? Talking to Vlad. Let's come over here for a second. I mean, there was some stuff in the profile there, I think is why he was pointing out that level. So I didn't know how it would react and I wanted to sleep. Well, despite the drop off in cumulative delta, they're not like giving up. But like we got to remember that this was like a 3,000 move up and a 5,000 move down, which you know, that's still kind of summertime action. So I'm not entirely convinced that move was informed trading, but it's enough that I'm nervous about it. Nervous about it, that's the word. But hey, I don't necessarily have to do anything. I did good. I took my one trade. And the robots did good. Like I could just, I will leave them on until 9 o'clock, but I could just leave them alone and be good. But I was, you know, they did really good the week before we took off. These look like they're doing pretty good. I should move J2 tomorrow. I'll move J2 over to the E-mini because I think we're going to do a combine. So. What do you think about order flow trading? Well, I mean, that's kind of been the basis of my trading and where I started. I would just be really cautious that like a lot of this stuff that people say about the order book. Let me back up. So in the late 2000s, there was a lot of people that were making some pretty good money from trading the order book. So like the guy the flash crash trader, Navinder, probably one of the best examples of this. He just watched the order book and he was market making. He was doing something really tedious, but he was making a lot of money. But then around the time that the flash crash happened, he wasn't making money from it anymore. That's kind of why he did it, was because the algorithms were stealing his lunch and he was, did stuff to screw them up. So that's the caution that I would put with order book trading, is that there are definitely things that you can read about the order book that can be really, really useful. But unless you have some sort of larger contextual clue that gives you a really good idea of what direction it's going to go, the order flow signals on their own aren't going to be enough for you. Because I tried that for a really, really long time, and I just was never quite able to make it work out. One of the problems being that a lot of the more nuanced signals that you might see in the order book can kind of be Jekyll and Hyde. Like you'll see this move and you'll be like, oh yeah, that always results in a really strong trend, and so you always take it. And then all of a sudden you come into this market where for 4 months in a row it doesn't work. So that's kind of the problem with a lot of those. Whereas if you know the macro context and the news that was just released, and you see a liquidity vacuum and you take it on the edges of that liquidity vacuum, and you can get really good trades most of the time from doing that. And that would be the other little hint I would give you, is I would pay more attention to the places where the liquidity seems to disappear than I would like when they're stacking a ton or trading a ton. So that when those spots where it's like they're just not able to hold a lot of latent liquidity and it kind of slows down, those are inefficiencies, right? It always comes back to we're trying to find inefficiencies. MNQ's RSI crossed the 50 line around 9:05. But we didn't cross down from that big down move. Twitter source now confirms some Democrats are eyeing a $6 trillion reconciliation package combining Joe Biden's jobs and families plan, as well as much more half paid for. Are you live trading right now? These are sim orders. They are. So what was I getting? Oh yeah, I was getting into, so Earn to Trade wants to do a sponsored video. So I'm like, well, hey, if you're going to pay me, why not? And so I think what we're going to do is we're going to run these robots on that. We'll run Gabby and Jay. They've been doing well lately, so I think that they could probably, I don't know if they'll make enough in a month or not. It'll be kind of close, but I think that they could probably get funded. But they could also just like crash and burn. and Gabby is doing like the skewed risk reward thing, so you know what I mean. It's like she's gonna win like 70% of the time. She should. But, you know, if it goes badly, it could be like really dismal really quickly, right? You get the right market, and these two lose 5 days in a row to the limit, you know. Earn to Trade got good discounts for combine cheapest one, 25K one. Or you repeat it till you can for 89. Well, so they said that they made. So I need to talk to them a little bit more, because I want to do it for July. So we'll see if they'll set it up for July. But they were saying that they were changing the rules. They were changing the rules. They made it sound like, though, the Gauntlet Mini. Oh, it's a 60-day test. Oh, so this mini one, the profit goal and the trailing drawdown are really close to each other. Daily last limit 550. Okay, but you could only lose 2 days. You could only have 3 bad days in a row, and then you'd be done. Oh, Crackhead says I saw. Yeah, so that's exactly what this is about, Crackhead. so one of their founders wasn't their CEO, but one of the people that provided the initial capital to start Earn to Trade ended up having been involved in some shady stuff. Okay, so I made a video about it with a clickbaity thumbnail about it. So that was kind of why they were in contact with me. I think that they're making a good point. Like I tried to be really careful about how I put it in the video, but I think that they have a point that the thumbnail itself kind of leads people to the impression that Earn to Trade themselves did something wrong, which is not the case. So, and that's where they got to them saying, we'll do a sponsored video. So I told them, like, I'll probably still, I'll do a sponsored video. It'll still be my opinion, and I'll probably still say negative stuff. But if they're changing the risk limits on it, that's kind of a change. And I want to talk about if that change is in the direction that we want to see the combines go or not. So I'm just looking at this one, this Gauntlet Mini. The profit goal is 1750 and the trailing drawdown is 1500. That's not bad. Oh, these are Gauntlet Mini account types. So what is that different? How is that different from the Gauntlet? 10% profit target and 10% maximum drawdown. Gotcha. You saying negative stuff seems a little out of the ordinary, no? You hammer everyone bully. No, I mean, I guess that would maybe be fair criticism. I mean, you could look at it that way, but I don't see it that way. Because the whole thing is when I made those videos, my intention is that I think that combines have like some good ideas, but the reality of it is that they're mostly making money off of failing. From everything that I can see. So I want to see the combines do things to move it more towards making money off of people being successful. And part of that was, I think that some of their rules need to change. Like they're really aggressive targets and a really, really close drawdowns. And it's been encouraging people to take, like crazy risk rewards to get it. Right. And that was kind of the thing that I wanted to see change. I don't know if they've already made the change, if that was the change, but their profit target and their drawdown being equal to each other, that's much better than what things were before. Much better than what things were before. And so I think that it's worth taking a look at and making a video about it. And if they're going to pay me to do it. And I told them, I was like, as long as I can still say whatever I want, and we're going to be completely open that it's a funded video, then I'm down. And they were totally okay with it. I was like, okay, fine, then let's do it. Yeah, the E-mini, I'm looking at what Ace is saying there. The E-mini is being a little frustrating, isn't it? And the good thing about larger account is risk. Well, yeah. So the thing is, they say it's a $25,000 virtual futures account with a 10% profit target and 10% maximum. So that means that you can make $2,500, you can lose $2,500. Is it going to launch nukes if I do something wrong? Yeah. Plus, the whole thing has been that we've been making these robots, and we kind of did a couple of things with them to kind of prove things with the combines. So I think, and these ones were ones that we back tested, and with the changes that we've made on them, I'm not so sure about Jay. It seems like Jay only ends up taking like one trade a day. So I'm a little skeptical about Jay's long-term feasibility. Because I'm pretty sure that most of the time he was taking more than one trade a day when I did the back tests. And it may be the environment. So it may be the case that when we get into a more active environment, because the issue with Jay is that he's looking for some order flow imbalances, but he's doing it on such a short time frame that there could be a significant enough difference between the live trading and what it does on tick replay that, you know, could make a difference in his performance. And so that's why I'm a little skeptical about it. You're going to check now at Ace Trades. Can you reply to mine while you're at it? Wait, what? I think I missed. Maybe he must be talking directly to Ace. Anyways, so I was kind of thinking about running it on a combine anyways. But then I kind of said, well, why don't we just run it on our own account? Run it small. But then the micro futures come along, right? So I'm really more interested in using the cash that I've saved up for the micro treasury yield futures. So we can run and do these on the combine, and we'll see what they do. I just need to make sure that I got all my T's and I's crossed. Like, we've been running these on Sim since the beginning of the year, right? It's been 6 months now. And a lot of those robots didn't make it. Maybe some of those need to be brought back up and try with some of these other changes. Kyle, I thought I might come back as well. What's up? How are you doing, Kyle? Doing okay. I'm kind of sitting on my hands at the moment because the S&P 500 is doing a bunch of weird things. I want to note, by the way, that even though we kind of have crossed the moving average and maybe moving back up, that the cumulative delta is not reversed back around. So I'm still a little bit cautious about trying to take any kind of a long. Oh, wait, they're saying that they both sent Ace emails. That's what it is. I see. What's up with your robots again? Oh, well, so I made a couple of so one of the changes that I made with Jay was that he was running on a 1 range chart, and I moved him over to a 5-second chart because it just couldn't process it fast enough on the 1 range chart. So doing it on the 5-second chart, it appears to be performing a lot better, but it doesn't take a ton of trades. It's doing like 1 or 2 a day, and it's like it wins every time. So I'm a little bit like, okay, like this may be because of some action, like a couple of things, but it doesn't matter. So Earn Your Trade wants to do a sponsored video, so we got to make sure. One thing that I got to test is the risk management. So I have like risk management built into the individual strategies, but I need to go and add like the account card thing so that they don't do more than a $500 loss in 1 day, right? So there's a little bit that I need to do, but those are all 1 or 2 days things. So I could fix that up and have everything running tomorrow and have that tested out before we go on June. And then if something comes up and I really don't feel comfortable with doing them, then I could still just do it by hand. Especially those micro combines, like I would be able to reach $1,000 in a month pretty easy. Would be interesting to see how I do it. Stick, welcome back. How are you? It's like, where's Stick? I think that's just about, we've seen just about everybody today now. There's somebody I'm forgetting in there. I don't want you to think I forgot about you. Anyways, either way, I think that running these robots could make an exciting video too. So, me Uzi. I knew you were there though, Uzi. Come on, you're always there, man. This is the problem, Uzi. Isn't it? I gotta tell you, man. Hold on, this caucus to yapping about Iran. I don't care about the Iran thing anymore. So they sound like they're close to a deal. It matters. It does matter. It's. I see this in life at every level. It's like the things that are really great, we just have a tendency to take for granted because it's like you don't have to, like everything Uzi says is like, how that's good information. That's like he tends to agree with me. My dude's working on the bathroom today, so I'm back and forth, but I got you playing for the... Oh, thank you, Uzi. I really appreciate it. When you guys come in and play the videos, and when you click the like button, by the way, if you haven't liked today's stream, how many likes do we have today? 13 likes? That's not too bad. Let's get that to 15. We need 2 more likes, and then we'll be at what our typical target would be. Ace, it wasn't the same without you though, bro. You know what? It was. I am less interesting, man. That's why we still need to work on getting Ace into Discord for voice chat so that we can talk with him, because I think that would be really fun and that you guys would really enjoy it. 16 likes, awesome. Nipples no. We're not gonna do that. You don't want to see all of my chest hair, right? That's oh man. Okay, there's another one. Well, it's 8 o'clock. We almost have a complete master bathroom. You know what? Oh, so let me finish. I finished with that thought. Next thought. Dude, what is it just me, or do like home improvement projects always take 10 times as long as you expect them to? Oh my gosh. Like when we were doing my wife's house, like just after we got married, and we redid both of her bathrooms. And it was like, okay, yeah, like we got this part done, and then all we got to do is this and this, and then it'll be... No, it was like 9 weeks later. What you do with yourself in the bathroom is okay by me, as long as you can... It's torture too, because you can't stop it, right? Yeah, the worst is when you start on something that you can't turn back from, right? Because then you can't use the bathroom. Oh man, my nose itches so bad. Hold on, let me blow my nose here. You're ready for the... Wait, what? No, all I did was this when I went like that, and I'm like, oh yeah, there's some hair there. I didn't show the whole... full grown beard. Oh man, so I should have shaved my, trimmed my beard on Friday, and I didn't. So then, we're there up at the cabin, and I've got a full beard. And by the way, it is hot out there, man. Like up in Colorado, and we were a pretty high elevation, just below where, all of the trees end up being evergreen trees, right? But it was still like 90 degrees in the sun. Like you just weren't going to stand out in the sun. And that high up too, the sun just beats down you so hard, right? Meanwhile, in Salt Lake City, it was 107 degrees on Tuesday. 100 degrees yesterday, but like holy crap, it is so hot out there. So I got this full beard. It was very uncomfortable. So when I come back, I was going to shave it, but I forgot to adjust the guard. So I ended up cutting it way shorter than I'm supposed to. So I probably look a little weird because you can't really see. I've got just barely like a 4 o'clock shadow. This is about the most. I bet you that's probably not the case, but yeah, man. So that was another pretty strong down move, suggestive of informed trading. You look like any regular monk still. I feel like that without the beard, I just don't quite look right. Like, you need the beard to like even things out or something. I don't know. I guess I don't look bad without the beard, but the beard is definitely more popular these days. Stick says I can't build a new desk because I have to throw out the one I'm using. Oh, I can't build a new desk because they're so effing expensive. Jeez. Oh, I found this one that was like a cherry veneer top for $50. I think I could use that. I'm not exactly sure what the material was underneath, how sturdy that is, because it was a big table, but it seemed like worth trying. And then I could try and restain the cherry veneer. I don't know if that's a good idea or not, but that's what I was thinking. It was like $50. Because getting just straight wood to build a desk is way too expensive. I bought one on sale for $1K. Oh my gosh, okay. Well, I think I got my timer is a little screwed up. It is indeed 8:10. So it seems like though that I should be doing something, or I should be done, right? Why does it seem to me like I don't know. You have a strong chin, so a beard accessorizes your face. Some men have slightly weaker chins, and a beard creates a stronger jawline profile. Oh, I get you. You're saying that this right here is defined enough that I don't have to have the beard, whereas other guys, if they don't have the beard, if they don't have the line, then they get the baby face. Yeah. I built one for $0, but yeah. For if I were to just go and buy like nice wood and I would want it to still be thick, like that, it would probably be $1,000. A full-grown lunatic mustache. I don't think that would work for me. The one of the problems is that like once my excuse me, I'm getting the hiccups. Once my hair gets about 2 weeks long, it just looks like this mangled mess. And it doesn't matter if it's a mustache or a beard or whatever. Like the mustache like that, it doesn't do that. No, it just ends up being this Yosemite Sam or something like that. It's a very big desk. Well, the desk that I was looking at was almost 8. I think it was actually bigger than this one. But I've got this stuff. So like my dad had one of those little things that allows you to mount your computer underneath of the desk. Stuff like that. So I kind of want to make use of that. And or move the UPS to a better spot. A series of beard and mustache TikTok traders. Anyways, I need a better desk. Because I would like to just mount things on the desk a little bit better. Like once I got that done, then I could probably get different arms so that I can mount my studio speakers between the screens and make use of my studio monitors more often. My desk gets the OmniDesk. Oh yes, I've seen that before. Treasuries moved up pretty good there when the E-mini started puking, didn't they? I wonder Yeah, it was only like one move though, but it's still a pretty good move from when we got out at like 21, 22. They have it in the USA. Well, I've researched that stuff a lot. Did you change the lighting? Yeah, so I have the lighting on a timer, and it's supposed to go off at like 10 o'clock or something like that. And it just turned off. I'll just go turn it on manually. Oh, I know why. Because when I left on vacation, I unplugged it. And that timer doesn't work. It probably isn't working if it's unplugged. So I just need to adjust it to the right time. That's what's wrong there. Maybe include the word death. Well, so one of the things that we've got to be careful about, right, is getting too good of a title when the underlying content isn't enough to back it up, right? So if I started putting desk in the title, YouTube would say, oh, when people are searching for desk stuff and they watch Seth's stream, they don't really watch it. So he's not very good content for that, right? But if I ever do end up switching the desk around, we'll try making a video out of it. I don't know, man. The issue again is I've got 3 monitors and then I've got these studio speakers, and getting the studio speakers positioned in a place where they come over the monitors is really hard. And probably what I need to do is mount the studio speakers to the desk itself. But the desk that I have is one of those IKEA ones with like the little honeycomb pattern underneath of it and a veneer over it. So it's not sturdy enough to mount things to. So I need something that I can mount things to, and then I could probably try drilling some stuff and screwing a bunch of cable management onto there so that the baby can't get to anything. That would be much better. Oh, yeah, no, you made it sound like it was just nailed together from random pieces of wood you found. No. It's a 7-foot table from IKEA. I sent a pic to Seth and he said it was the worst. Oh, I don't remember I remember it being bad, but I don't remember the exact picture. It was pretty bad. Well, Amy kind of giving some hints of turning around now. There's a little bit of a spike up in volume. Well, it doesn't stop guys from clickbaiting. Maybe this algo thing isn't that strong, or you need to misread a lot for it to punish you. Well, so if you clickbait, the issue is there's 2 metrics that matter. One is they click on the video, the click-through rate, and the other one is the watch time. So if I come in and I get a video that is like over 10% click-through rate, which does happen on some videos, well, it has happened for periods on certain videos. But like if the initial click-through rate is 10% and it's like more than 50% of the video watched on average, then that video tends to get pushed a lot. So the video on trading computer hardware, that's kind of the case. Another thing that helps is if there's like another video out there on the subject that's really popular. So I think one of the things that helped with my trading computer hardware video was I made that video. It was kind of established, and then what's her name? Humble Day Trader. I can't remember what her name is. You all know who I'm talking about, though. The girl that does trading on YouTube. That's probably like the top channel now these days. She made a video about the computer hardware, and so that video was showing up as the recommended video for everybody. in the sidebar, and so that's where a lot of the traffic has come from, I think. Actually, let's go look at that. Where does the traffic come from? Desk with wheels. Oh man. One of the issues, though, as I keep thinking, like with the speakers and everything, is like maybe trying to fit it all on the same desk isn't realistic, and I should just make another desk for music. Got to have a desk on the other side and replace that hutch that's for music. But then where do I put all this stuff that's in the hutch? I don't know. There's not enough room for everything. I just need to become a billionaire and buy a nicer house, I guess. No, I don't think so. I think I want to live here for the rest of my life, but yeah, we'll see. Here, this one. So you see, this video has a 5.6% click-through rate, but early on, it actually was almost 10% click-through rate. So, and it's actually spiking up lately. But traffic sources, YouTube search, and suggested videos. Okay, so that means that people are seeing it recommended in other videos, and I bet you, if we come into will it let us? Maybe not. There's gotta be it. I'm pretty sure there is a way somewhere. Oh, here it is right here. Okay, which videos are the most common one? No, I don't know. I don't even know who that is. Anyways, you can see that's part of how that video does so well. So we need to do part 4 of our series where we talk about the maintaining your strategies, which I think is mostly going to be pretty simple, but I am going to talk about sizing. So that's important to look at. And then I think that I'm going to go focus my way. Well, actually, let me go check. I have a list. My nose itches so crazy. It's so dry here in Utah, and it just makes my nose, even if there's nothing there, it just makes my nose itch. I just want to keep going like, scratch the inside of it. It's just so bad. Okay. Oh, that's right. The day trading Nirvana video and the biggest lie. So like the biggest lie one, I kind of I don't necessarily want to do right away. This one we've basically already done, so we can move that one over there. But I think that I'm going to put this one up at the top. Seems like I had another list somewhere. Maybe not. I don't know where it went. Seems like there should be other ones. I don't know. I have to think about it. But basically, I want to start moving into the more general videos, right? So like I focused on the videos that I were like, if you're starting out futures trading, what should you do? Like that's kind of where it started with, right? It's like, oh, I'm new. I don't know where to start. And so I tried making a bunch of videos for that, right? Those ones don't do as well as I'd hoped. I think that it's kind of hard to get the right keywords in there. Reflective set, did someone print that? What? I don't know what you're talking about. I could send you an entire box of prop beards and mustaches if you want to do the TikTok. What we should do is we should just get me a set of toupees. This is the thing. I don't think that that beards and stuff would be all that great on me. But man, if I had a different hair for every day. You did a reflective space. Yeah, I probably did. Because there was just like a realization that there was like, I only have like one idea that I think will really push a lot of traffic, and I really got to increase that. Maybe most traders want to learn as they go and don't research information like you do. Well, I think the reason that so let me try and show why here. Where did it just go? Did I close that window already? I hate it when I do that. It's like I said, I'll open up a window and then. And let's switch that to the last 90 days. Okay. So, which videos get the most traffic? Okay. Trading computer hardware. What is the best futures trading software platform? Okay. So, what is similar about these two videos? They are things that people are going to search for. And I have the keywords that hit those keywords, and they answer the question, which futures trading software platform should I use? What kind of a computer do I need? Right? And then Ninja Trader 8 Programming Basics. That one was a good video, I think. Okay, Dom Trading, Scalping Fast Volatile Markets. I pushed that video quite a bit, so I think that that's a big part of why that one is high up there. This one is kind of clickbaity. Stop wasting time with Robinhood and trade futures. Why you should trade? You get what I mean? Like, the reason that they do well is because people are searching for them and they start to rank well through search, and then because of that it starts recommending it elsewhere, right? Then a couple of these are actually just some live streams, right? Okay, so then we'll probably come down into okay, so like here's the one, trading strategy research tips. Okay, that was step one in my how to develop an algorithm one. So like the question is, how do you give it a title that people will search for looking for that thing, right? And that's the issue, is that these videos are about things that people don't realize matter, right? And so it's like, since they don't know what they're looking for to begin with, it's really hard to get yourself ranking really high for it. Makes sense? So I have this. So this one is a good example. My biggest key to success in futures trading. And then I talk about how you want to be in a market that is doing well at that time. That's the key on that one, right? How do you search for that? So what I had in that title just didn't really pick up in the search terms, right? But if I have something like day trader health tips, that's something that I think people search for. So I need more videos like that. Now, another one was I made one about GameStop, and I thought that that one would do well, but you can see here it didn't pick up traction at all. It didn't pick up traction at all. It doesn't even show up in that list for some reason. So don't know what the deal is with that. So there's the same thing, like the one that's like the biggest lie in day trading. It's a good title that I think will get people to click on it, but you've got to get it out in front of a lot of people first. And my YouTube doesn't necessarily push my channel like that. That's why it's like, okay, first I should have a video about help, like make a couple more good search videos. And then those other videos that have good content but aren't really searchable, those will get pushed to people, right? Try parroting Discovery Channel survival shows. Well, anytime that I do a Steve video, I'm looking at something specific that I see a bunch of other people doing and trying to make fun of it. So, but the problem with Steve, again, the thing that I think is wrong with Steve, and my dad first pointed this out to me, and I think he's right, is that I think that the thing that makes Steve funny is a little bit too highbrow. You know what I mean? Like, he needs to do dumb things that even little kids will think is funny. I need to do things that even little kids think is funny. And right now it's not. Like, and the problem is you get all these retail traders that are like new to this, and so they don't even see why it's so dumb. You know, they're like, oh, this is just like any other guru. So that's what I've got to do with Steve. That's why I started doing a lot of videos where it was like he would say something and then he was like immediately proven wrong. Logically, if an order is big enough to move price up a level, can a small order get it back to that same level after it had gone up? Theoretically, yes. But here's the thing, is that, you know, like, what is a level? Like, why would it matter, right? That it got to a certain level or it not, right? So these kinds of things about like how many contracts to trade a particular efficiency, if I buy 1,000 contracts, it will move the market up a certain amount. But then if I turn around and I immediately sell 1,000 contracts, it's actually going to move down more than I had moved it up initially. So you don't make money. Essentially, you don't make money doing that. So the only way that you're going to be able to make money from that sort of a thing is if there's a reason that it should be at a certain level, right? So I will buy it up, it will get to that level, and then I will sell it all at that specific level. And because there's a reason that it should go that way, that I have an actual edge that I know it's worth this much because I know something about news that the market hasn't realized yet, for instance, right? Then I take the trade, the news comes out, the market pops, it goes to that level, and I take it all off there, right? And that's how I get out without having to feel the adverse impact, right? So if it's if you don't have a real edge to begin with, then the order flow, for all you know, is just noise, right? So does it kind of make sense why that wouldn't necessarily... No, that's not true, Ace. Guys trade hundreds of thousands of contracts. Someone trading with 8 isn't going to affect it. You shouldn't look at it that way. Here's why I don't think that you should look at it that way. Because we can calculate it. Like, it's not like I'm not like guesstimating here. Like, there are methods to make pretty effective estimates of what your impact on the market is going to be. So you trading 8 contracts might not do it, but you and everybody else that knows about that signal trading it together can. And so you could look at a thing, and if you say, I see a mispricing, and it's the S&P 500 is supposed to move up 4 points or 16 ticks, right? I can calculate the optimum number of contracts to trade that with, and I can watch the order flow from when I get into the position and say, like, too many people have traded it, and ergo it's not going to work. And when you get into a market like we are in the summer, like especially before the open moves, it is something that you should definitely pay attention to, because if the volume is not there, then you're just not going to be able to take the trade efficiently. You can't use as many contracts, frankly. And if you're only trading one contract, but you know that other people are trading the signal, you may just not want to trade it, because it may be the case that it's already been arbitraged out. Right. Let me get this straight. Bob puts in an order for 800K long, simultaneously go short with 3. Which direction will the market go? Well, that's 800K is a little bit of a silly. Would depend on what time they put them in, right? There you go. But if I get in first, they will get the short end of the stick, even if they do the same thing I do. Yeah, so that's kind of the point, is like, say you're just going to trade with 5 contracts, right? How do you know that you're the first one to get in on it? How many other people were trying to trade that inefficiency, right? Because if it's already been over the optimal number, then you're going to get screwed, probably. Like, you don't have an edge at that point if it's over the optimal number of contracts, right? So you have to know that you're getting in first, right? And if your the reason I bring these things up is, like, if your strategy is, for instance, the cross of a moving average, then what makes you think that you're going to be in it first? Probably what's going to happen is everybody is going to get in before the moving average gets there, right? Man, E-mini took a pretty aggressive move up there. Can be silly. Can we agree that Bob will move the market now? Well, but again, you can calculate it, right? So we can calculate what effect a 800K meta order will have, and we can calculate what effect a 3 lot order will have. And there are a lot of situations where, even for a small retail trader, it does matter. And like I said, in the S&P 500, if you're trading the S&P 500 before the open and it's like summertime action, that it can matter. And you better be first, right? But the reason why I was saying matter to calculate your impact or others if you're retail. So the reason why I'm saying you shouldn't take that approach is because you can calculate the optimal number of contracts, look at the volume that actually trades, and see whether it matters or not, right? And identify the situations when it matters and it doesn't matter, right? So, because if you just take the position of like, my order is so small, it never matters. That's the thing that I'm saying. I can prove that that's false. I can prove that that's false. There are situations where even 100 lots could screw you up. And so, especially if you're trading something that's like a built-in indicator, could there be another 100 people trading that? Yeah. And especially if it's like, other people size up. So maybe you're only trading one lot, but other people trading that are trading more. Like, so it might only be like 5 guys could be enough to do it, right? Size matters in the sense that you could say that whatever the reason people get in for that makes it legitimate, whatever that size is, information would lag, and there will be someone who will listen to that information late. I wasn't quite follow what you were saying there, but my point was there are times in the market where 100 to 1,000 contracts matters, and that less than a dozen traders trading off of that could affect the signal. And so you probably don't want to trade it during those times. And what you can do is you can go and look up the Kyle model, and this is what I'm going to talk about in part 4. And we use the volatility of price and the volatility of volume at that time, and how far you expect it to move, and calculate the optimal number of contracts, and then watch the market at that signal to determine if you should take it or not. Yeah, so I think others are not looking in the eyes of a hedge fund and are instead looking through the eyes of being retail traders. Yeah, but that's why others are confused about what you're trying to say. Well, I don't think it's just that, Stickball. I'm contradicting something that everybody takes for granted. That's not true. Okay? So the thing that I'm trying to counter here is you as a retail trader will never have a meaningful impact on the market. And you as an individual might not. But the strategy that you are trading and the combination of everybody that are trading that strategy can have an impact on the market. And there are some situations where it has a significant impact and will ruin the signal. And people assume that it's like, well, these guys are trading thousands of lots and this and yeah, but it's not always like that. Right? There are periods before the market opens where there's only a few hundred contracts trading, guys. And in a situation like that, yeah, you're going to have an impact. You know what I mean? But you cannot possibly know without perfect information what people are trading it. Okay, so this is where what you would do is you could take the trade, but you should watch the volume afterwards, right? So if you take the trade and there's been more than the higher end of the deviation of volume and it hasn't gotten back to your target, you need to think about taking it off. So how many traders doesn't matter at all? Well, again, use the Kyle model to calculate the optimum number of contracts, and then just realize that if more contracts than that go long or short, it's potentially hurting the profitability of the signal. But this is why news is so good to trade, because news creates a lot of inefficiencies and it makes it easier to take advantage of them. And it gives you more volume for you to hide in and take advantage of those inefficiencies. If you take the inefficiency when nobody's trading, then you're just making yourself a target. And I know that it seems like you shouldn't matter, but there are. Just use my model, dang it. Yeah, use no, it's KYLE. Kyle 1985 is the paper that you need to read. But I digress. The point is, the assertion that a retail trader doesn't need to worry about sizing, it's wrong. There's and it's not just because like it could potentially affect your signal. You learn so much about how the market functions from understanding the sizing. What's the Kyle model? Is he by any chance married to a Karen? I don't know. I don't know who the guy is.
Bye.
The name of the paper is called Continuous Auctions and Insider Trading is what the paper is called. So just from the name of it, you would think like, this probably isn't useful to me, right? I'm straight up telling you, this paper is like the basis for like all market making in the last 30 years. All right. And it has some formulas in it that you can use to size your trades. Now, it's a simple model, and there's some inaccuracies in it because it doesn't factor in square root impact. It does linear impact. But for the size that we as retail traders are trading, it's a rough enough estimate that you can go and you can determine how much volume you really need to be seeing in the market for you to try and take your signal. Does that make sense? So you can look at it and you can say, if it's not moving this much within this certain range, or it's not trading this much volume within this certain range, then I'm not going to take it. Right? So like you take this trade, I take a long, and I'm looking for 16 ticks, and I maybe want to be in the market for 5 minutes, right? So if I go and I do the math, and I can see that based on the volatility of the volume and the volatility of price, that it's not hitting the metrics that I need to take the trade, then I don't take it. And that is why you very often see these days that I wait until the market is open to try and take it, and I try and take it during the open, because that's when I have the best chance of it working. Yeah? But that goes to this other part, which is that there really needs to be like a real market inefficiency that you're taking advantage of, right? Like, there's that sweep sell again. You can have these situations where you have some combination of indicators that you've back tested, and it seems like it maybe works 52% of the time. And it's like, are you finding like a real inefficiency though? Like, do we understand why that there's an inefficiency there and that it should be consistent? And if we don't, then we have to consider that it could just be noise. And then that's like a whole other slew of problems. So what we would rather do is we would rather be trading off of something that we can prove empirically is a market inefficiency, right? Like I can prove empirically that there is a square root law limit to the size of large meta orders that limits how far an instrument can go in a given time, unless like the liquidity completely pulls. So that's a real inefficiency that we know exists. And there's a lot of research to back up that it exists. Or volume tends to cluster. That's an efficiency that we know exists, right? So then we can start to use that information to set targets and say, based off of the inefficiency, how far of an inefficiency does it tend to be? And then determine what the optimal number of contracts and price volatility we need to be able to take that trade without being seen or detected by the market, and then wait for that condition and don't trade it if there's just not enough volume. Please draw the square. a graph of the square root. Oops. Tends to look like this. It's a curve with a limit that it never quite reaches at a certain spot. But let's combine two meta orders. So if you got two meta orders going in the same direction, then they're just going to combine together, right? That's why I was saying, like, the specific definition of a meta order is, you know, I'm an institution and I have an order for X thousands and I combine them together, right? But really, it probably a more effective way of thinking about meta orders for you and me is everybody trading off of the same thing, right? So if you are trading, let's say, a moving average cross, the meta order is not your one lot, right? The meta order is everybody else that decides to take that trade in your direction at that time, essentially. I mean, that doesn't look like I don't. Whatever. You get the picture. I don't know. It doesn't look like a boob at all. Could draw a volume profile. That kind of looks like a boob. Oh, we do have 10 minutes here. By the way, 18 likes. Thank you guys very much. That should be a good, pretty healthy stream today for the summertime at least. So. U.S. Treasury Secretary Yellen, deficits do matter. If the second order was smaller than the first one, but I'm just saying you would consider them part of the same meta order. It's just a slightly larger meta order, right? And the more that they trade, the closer that they come to the limit of their impact. That's why you run into these spots where it's like you get a ton of volume, but it gets absorbed and it doesn't go anywhere. I mean, like, we could even game it out here in the S&P 500, right? So the issue here in the S&P 500 was that we had some news at 6:30 that I guess was positive. That move up was about, that was 10 points right there. That was 10 points. Okay, so then we get into the open and they're buying it, like, why? To buy it or something? So what happens? You get a meta order going the other way and look, it goes, completely erases that move and then goes down lower, right? Then that meta order's over, there's a rebalance, but because of the way that the book has been disrupted in this area, it also goes up pretty far. But here's the thing is, like, was there an actual reason that it should be stuck to 42.20? Like, do we have a fundamental valuation at that price that tells us that it should get to that spot? You know what I mean? We don't. So we don't really, you don't really have an edge. So this is just noise trading. Then what's going to happen? Meta order going up, then that meta order is going to come off and it's going to go the other way. You just get screwed over. But what is the meta order executing against? Just the latent order flow, just the market makers. So the market makers and the noise traders, right? So you think about it as three groups. There's the market makers who are just trying to make the spread. There is the noise traders, which are all of these retail traders that think that they have an edge, but they really don't. And the informed traders, these are the people that have some piece of information that is not widely disseminated in the market that tells them that price is going to go to a certain location. So if they have that inside information, they know that that location is likely to be touched. They can then say, what's the optimal number of contracts to take to maximize my profits on this trade? That's what the Kyle model that I just talked about, in the continuous auctions and insider trading. I shouldn't be talking about this. We should just, retail traders shouldn't know about this paper. Can you imagine? It's been 30 years. This paper is one of the most famous, most important papers in all of market microstructure. And in 30 years, retail traders have not caught on to it. We should probably keep it that way. We should probably keep it that way. So, but the whole thing, it kind of what Kyle shows is that the market maker doesn't want to trade against the informed traders. So he pulls his orders when he believes that there is a probability of informed trading, right? The insider trader, on the other hand, he needs to be able to make enough money to be worth revealing the information to the market. You get what I mean? Like, if I know that price is going to move up to a certain location because I know like what the report is going to be, or that the government's doing something, or whatever the deal is, right? As soon as I start trading that, the market, that information is then priced into the market, right? And so at that point, the market knows about it. So you're kind of giving away your advantage. So you have to be able to make enough money on it to make it worth revealing it to the market. And if there aren't noise traders, all of these guys just doing random stuff that end up not mattering, there's not enough noise traders, then it's not worth it for the insider, the informed trader, to reveal himself. And that's what we're talking about, is you kind of have to consider yourself the informed trader. You think that it's going to go to a certain location. Is there actually enough noise out there in the market at that time to make the trade worth taking? And I'm finding more and more, like, this is the whole thing, is like, you've been in a trade, everybody's had this experience, right? You've been in a trade, you take the trade, it doesn't work out, and then you look at the market and you go, well, today's kind of a slow market, probably shouldn't have taken that trade, I should have known better, yada, 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 right? Well, with the Kyle model, you can actually quantify that condition. That's why it's so important. To cut your teeth on their mechanics, I recommend doing call or put spreads on small stocks on MES with options on futures. The retail trader can do nothing with that paper. I mean, I think that it's useful knowledge. like there's a couple of things that paper proves, right? First thing is there's something that a lot of, I think that the retail traders are coming around to the idea that this happens, but they all think that it's kind of like theory and like it's not really proven. Orders have impact on the market, and so if somebody knows something and they trade off of it, it moves the market. So that, number one, is a key thing to keep in mind, right? So of course the market can also just move randomly. So then there's this whole question of what kind of a move suggests real market information and which one doesn't. And using the Kyle model, we can, that gives a threshold at which we should start to think, oh yeah, this is probably informed trading. Makes sense? So there's an amount of volume overall and noise that we don't want to trade, but there's also going to be a move, a cumulative delta of significant magnitude that we should start thinking somebody knows something. That's why I stopped trading today, because I saw something that I knew was enough that I have to consider the probability of informed trading, right? And since I don't know what that thing is, it's hard for me to trade and find an edge in it, right? And so there's two things that you learn from it right away. And then the other thing is that you understand what the basis of a lot of these market making algorithms are. So you can kind of judge what is going on in the level 2 a lot better at that point, right? So there's a lot of reasons why it contains significant edge for retail traders, I believe. But in the video that I plan on recording this weekend, I'm going to go through the math. So naked options can screw you easily if you don't understand IV. Yeah. It's I don't know, the options trading really interests me, but it comes back to that thing, which is like, to me, an edge is, how do I put this? It's not enough for me to have gone through and done a back test and see that like there's an X% profit probability that you'll reach this target before this stop. That to me is not enough to prove that like if there is an edge, right? I want to see something that like I could empirically show to you without having to show my own trading, just from explaining dynamics about the market and then showing you a model and then showing you how well the market matches up with that model. Right, that's more like an empirical evidence way of showing that there's an edge in something. Hold on a second. That was just the kids. It's 9:01. I gotta get going. It's better for the retail trader to think this is all fugazi and bet up or down. Yeah, it's true. Yeah, because there needs to be a certain amount of noise. There needs to be noise traders. Okay, guys, I gotta go. Stay profitable, friends.